Well, welcome back to the CNBC Africa special, where we are going to be analyzing the midterm budget that Finance Minister Malusi Gigaba just finished delivering a couple of moments ago. Now, going into this, most economists had expected that it would be pretty bad, and it looks like it has lived to those expectations. If what we're seeing on the market is anything to go by right now, as we said, the rand has plummeted. We've got the JSE sailing at record highs right now, but that is not because of confidence in our equity markets, rather because of the bulk of the gains being driven by most of the companies that make their profits offshore, like Nascence and Richemont, buoying those gains. But let's get into some of that analysis of the budget. And joining me at the desk is Dr Azar Jammine, who is the Director and Chief Economist of Econometrix, Xhanti Payi, who is an economist and head of research at Nascence Advisory and Research, as well as Osman Mollagee, who is a partner or international tax and transfer pricing at PwC. Gentlemen, thank you so much for your time. I suppose as a point of departure, your thoughts on the budget. And Osman, I'll start with you.
I think from my perspective, the unsurprising point, but disappointing nonetheless, was the shortfall on revenue collections. We were predicting somewhere between 40 and 50 billion. Right. Closer to 51 billion looks like we were ending up. And then I think there are a couple of things that feed into that. And it's not, for me, it's not insignificant that this is the biggest shortfall since 2009. So I think
something the minister himself actually acknowledged.
Indeed. Yeah.
Sorry, continue.
Okay. And I think there are a couple of significant things there for me. For me, probably in order of importance, the most significant one is that over 20 billion of that shortfall is a shortfall in personal income tax. Right. And for what that means for me is that we've reached quite a critical point, because most of us will know that last year, or at the beginning of this year, our expectation was that 16.5 billion of extra collection was going to come from personal income tax. So that has been, this year is clearly a failed experiment, right, in my view. So first of all, we're not getting the extra 16.5 billion. And remember, the 16.5 billion was, I mean, maybe 4.5 billion was the super tax on those who earn 1.5 million or more. But the rest of it was really on the working class. Sure. 12 billion of personal income, extra income tax, by not adjusting for inflation. So that experiment, I think, and we've been experimenting with that over several years now, how much more can we squeeze out of taxpayers? And I think this is the year when we realize, actually, on corporate tax, but most especially personal income tax, we actually can't get more out of them. And in fact, what we thought we were going to get last year, not only we're not going to get it, we've actually gone backwards. So that's quite significant.
Sean, I suppose it's not a surprise if you look at what our unemployment rate is doing. I mean, we're sitting at 27%. Every other day, as a reporter, I walk in and hear that this company is axing thousands of jobs and this company is axing jobs. So it's no surprise that personal income tax, they're underperforming. But Xhanti, your takeaway from the budget?
Look, I mean, clearly he was going to have a very difficult time anyway. So that wasn't surprising. And also, I don't think he pulled any rabbit out of a hat. It was pretty standard. I think the one thing that continues to worry, what he calls, the social rights, which is social spending, over 2/3 of the money goes there. And then, of course, that the servicing debt is now rising up to as much as 15% of total spending. That is a huge amount of money if we think about then what is left in terms of what we need to do in investing in our investing capacity and being able to actually continue to turn the cycle around, because that is one of the things that we can't do. We keep adding and adding in terms of social spending, we're not getting the returns, and then we're not actually turning it around. And as we add more and more of that, I think it's something that should concern us. Certainly in the medium term, it used to be a point where we said we are worried about it in the long term. Now it's actually a big worry in the medium term. And
the emphasis on the increase in the social spending, or it accounting for 2/3, it delivered a very strong tone of the government's rhetoric right now of a radical economic transformation and inclusive growth. But I want to come back to that. But Azar, your takeaway from the budget?
From the beginning, I didn't believe that this medium-term budget policy statement had much chance of success. Firstly, because of the fiscal parameters we're talking about in the context of low economic growth. Secondly, because of the manner in which Gigaba and his deputy were originally appointed as ministers and deputy minister of finance. That shattered credibility in the Treasury and its ability and the ability of the public sector to have to be trusted by the private sector.
Sure.
And there was no way that he could actually restore that trust with just one budget. I would go so far as to say that in the context of what really counts, which is the December presidential election, you don't count out the possibility that this was Gigaba's one and only budgetary presentation.
Of course. I mean, I understand right now the shortest serving minister is got about 4 months to their name, so it isn't something that you can rule out. But in terms of him going into this, you know, suffering a bit of a credibility crisis, as you alluded to how he was appointed, he did speak a lot about leadership and accountability and, you know, reining in on state-owned enterprises that were not performing. And that rhetoric from a leadership or credibility point of view, fine, it didn't do enough to appease your confidence in him this time around. But a continued talk like that, I mean, could we see this minister, if he stays as finance minister, as a more credible suitor?
One would have to wait, and I said that back in March, one will probably need to wait for years rather than months for that credibility to be established. Mm-hmm. And much of it will lie in the fact that as much as he may be talking the right talk, will we actually see things improving in terms of the fight against corruption, accountability, implementation of government programs? There just hasn't been enough time to gauge that. I'm actually surprised that the markets took all this news quite so negatively. I would have thought that it would have already been built into the market.
But was it not perhaps the much wider than expected budget deficit? I know that a Reuters poll had been, and perhaps Xhanti, I can put this to you, because a Reuters poll coming into this had projected that at around 4.1%. Gigaba is saying that it's going to go to 4.3%. Could that not have taken the market by surprise, as well as the downgrade to our growth?
Look, a lot of people actually, there were some people who saw 4.5%. So I think
right.
that this, you know what I mean, you know, that there was, everybody expected the worst of the worst. I think partly also because, you know, I thought that especially we don't know that what we don't know about what is going on at the revenue services there even. Mm. So actually that was a big worry for me about the numbers that will come out of SARS and whether or not we can believe those numbers. So I think a lot of people were expecting really much of the worst. And so I think here, the main thing is we're always hopeful, you know, that, you know, something good is going to come out. And I think when nothing came out, when everybody kept reading and reading pages after pages and there was nothing special coming out, actually, as I was saying, you know, this sounds very much like what we've heard before. Mm-hmm. So I think that may have actually been the more disappointing bit.
It's a bit harsh. With every negative, there is some positive. Were you guys sure that nothing positive was mentioned in this budget? Maybe even the fact that, you know, you do have some state-owned enterprises that are not doing pretty well, the likes of the Development Bank of South Africa. Osman?
I don't know if I could find anything positive, to be honest. Even those comments, and I think even we were edging in the direction of some positivity, like the proposed sale of the Telkom shares. I wonder how many commentators are going, you know, now, you know, have we not been talking about this? And, you know, is it too little? You know, should we even be holding on to SAA? So I think there's kind of the hints of positivity are still too minute to have any, you know, less negative impact on things like the market.
Hey, but he did mention the possibility or the fact of a strategic partner there for SAA. He emphasized that a national carrier obviously is important, but he mentioned a strategic partner. That's a positive, no? That's an indication of some sort of privatization.
I wouldn't go so far as privatization. I think he steered clear. He went out of his way to emphasize that SAA is not for selling. And clearly that is government ideology right now against any form of privatization. Right,
right. Another, I feel it was a positive, hopefully. He mentioned something about the impasse in the mining sector, said that government is eager to get back to the negotiation table there with the mining bosses to move forward on that. Surely a positive?
Look, this is language that we've come to be used to. I mean, the strategic partner thing is what we translated as getting closer and closer to some sort of privatization. Right. You know what I mean? So this is not new language, actually. This is province language that he used himself. So this is stuff that we've been hearing over and over. What has been going on in terms of the mining sector, which is also language that we've heard before. And suddenly we had this mining charter, and suddenly that people are trying to reject as much as possible. He said nothing about whether or not we're going to reverse it, but maybe we'll stabilize it. It just doesn't lift off. I think that's the main thing, that it doesn't lift off. And so you keep wanting to hear good things, but this is the things. Even when we think about the 14-point plan that he had, I would have liked to hear him tell us a little bit of progress around those plans. What have we been doing? What has that achieved in the past 7 months? Because in some sense, it would have been nice to say, look, if you have half a year at least, you have some time to say, look, we started out here, and those things, we are seeing them coming of fruition. And I think that is part of the problem as well.
How do you think the business community will interpret this budget? I mean, he did acknowledge the fact that business confidence is low, and because of that, we're not growing enough and we're not creating enough jobs. But he also challenged the business community, the CEO initiative, in fact, to do more to foster local procurement, which should be a positive, for your local township-owned, black-owned enterprises. But how do you think they'll respond to that challenge?
I'm very interested to hear everyone else's views as well. But I think business can, I think there's no doubt that business can do more. But if you were to ask how much more is business doing now than they were doing 5 years or 10 years ago, I think we can call business as being in the trenches. And I think there's going to be a sense of, we as business think we're moving in the right direction, and certainly more can be done. But is this deflection? Is government doing what they need to be doing? And that is my expectation of businesses' response.
Probably Malusi, or judging by the round of applause that he received when he walked off that podium after delivering that midterm budget, there's this feeling in that room, I guess, that government is doing what it needs to do to grow the economy. I mean, Azar, in your opinion, well, are they?
No, I think at the heart of the problem is a huge trust deficit between the business community and the government, especially in relation to the whole thing of state capture. A lot of businessmen will say they listened to what Gigaba had to say. A lot of good points were made, and especially this trying to bring small business into the procurement processes more. But, firstly, we've been hearing that for a long time. Secondly, they are very skeptical. They wonder, is state capture still behind the thing? Can we be sure that he, especially given his history, is talking so positively about the prospects for the tourist sector, and they know what he did to tourism in 2015, where overseas tourism fell by 6.9%. And the moment he rescinded the measures that he brought in, tourism boomed by 14% last year. And it's that kind of skepticism about his ability to really carry through with what he's saying, and the feeling that he was the one who actually generated, or really was the catalyst to the beginning of the deterioration in corporate governance within public enterprises when he was minister there, that is going to linger for a long while unless he can actually prove them wrong, and that's going to take at least another year.
And a lot of taxpayers' money are going in and out of court. But Xhanti, I couldn't help but noticing your nodding as Azar was speaking very strongly about state capture. I mean, to what extent is the, this cloud of a state capture, this broken down governance in the public and private sector holding us back from achieving our ultimate growth potential? Look,
I think there was a time when business was led to believe that they could trust government again. Especially with Pravin Gordhan, going back to them and saying, guys, we have a crisis, let's go and work together. I remember we were facing all those downgrades and all of those things. And I think there was some goodwill that was built there. And then the president went and did another reshuffle, and then sort of almost they felt kicked out. I think part of it also is when we listen to, I'm very keen on manufacturing, on the manufacturing sector. Right. And he talked about localization, and he talked about, we're going to build all these trains, but they all keep waiting. And then, So he was talking about the logistics sector, for example, and how we're going to work on rail, and Transnet is going to spend all this money. And then we see Transnet going overseas to go and buy rail and doing all those things. So they think, well, you want us to go and participate in, in buying local, in supporting the local economy, but you don't actually give us the leverage we need to continue to work with you. So I think that trust deficit is going to continue until, again, we can count, we can go through a budget where he says, we can show that this is what we have done, where we allocated 50 billion into the rail sector, this is what we have done working with our partners in the South African business sector. Our problem is that we are still not seeing those kinds of reports where then we can say the business sector can start to believe government and work with government in a way that they themselves feel every promise that has been made has been actually met with the kind of action that's there. So I agree with Azar that we are struggling to actually build that, and it's going to take some time because we've got to really prove that what we've been saying, you're actually going to walk the talk, and it's not happening at the moment.
Well, let's ask a government about walking that talk. We do have the Deputy Finance Minister, Sifiso Buthelezi, joining us now on the line. Deputy Minister, thank you so much for your time. Congratulations to you and your team for delivering the maiden midterm budget. Unfortunately, it doesn't seem as though the market or the investment community has taken that budget down too well. There's a lot of talk of, it's too much talk rather and very little action. How are we going to hold you accountable to ensure that you deliver on some of these action plans that you have announced today, or the Finance Minister announced today? Well, it seems like we're struggling to get the line up right now. We will revert back to the Deputy Minister. But then, Osman, let me come back to you. Obviously, in this budget, as I was doing my preparation, I read that we weren't really expecting much in the way of tax announcements or tax increase announcements, rather. So we'd likely get that in the February budget. Throwing forward to that February budget, I mean, what do you expect to or the Finance Minister say in the way of tax as they really work to plug this revenue gap now?
I think that's a huge question, isn't it? And just to confirm your point, so generally this medium-term budget is really not about proposed tax changes or tax policies. It's really just about we are halfway through the end, and we never have tax rate increases or structural announcements here. So, but I do think as critical as the revenue side of the equation is, and our collection from taxes, I think it becomes, I shouldn't say it's more critical now, it's been critical for many years now, but it becomes more and more important, or even more important this year, to take note of the point that the budget next year has got to be about expenditure. It has absolutely got to be about expenditure, because when it comes to the revenue side of the equation, we are more with our backs against the wall than we've ever been. So in terms of increasing revenue collection, and maybe let's just talk about this, because sometimes, what the various ministers have been doing over the past few years, obviously, is to focus on sometimes structural increases, increasing rates, sometimes focusing on, let's say, collection mechanisms, enthusiasm in collection, and efficiencies at SARS. And I think I don't think we're going to be able to squeeze more out of SARS in terms of the way that they operate, and then being able to collect more and collect more quickly from the existing base. And I don't think rate increases in the major taxes such as corporate income tax and personal income taxes, I don't think that's going to have a major impact. And I think this year has really proved that so far, except for VAT. So I think that is perhaps for me the one, if I can call it, unopened tap that is available to the minister, but that really then becomes the last of it. So right. we can't keep going there, because the increases in personal income tax last year, as I said, they haven't delivered the results. The increase in VAT might, but it's not going to be sufficient to deal with the hole that's being created by revenue.
Osman, we'll get back.
Sorry, by expenditure.
We'll get back to that conversation. Now we do have the Deputy Finance Minister, Sifiso Buthelezi, joining us once again. Mr. Deputy Finance Minister, thank you so much for your time. Is this the best mid-term budget that Treasury could have delivered under these circumstances? Because if we just take a look at what the market is doing right now, I mean, we've got the rand that has plummeted, definitely not a lot of confidence in what the market has heard. But in your view, is this the best budget that could have been delivered under these circumstances?
Yeah, definitely. It is difficult economic times. And you try to do the best with what you have and under the situation that you are having. But having said that, I think when the Minister of Finance started at National Treasury, a lot of things were raised, but one of the things that was raised was the question of our commitment to the policy and the budget that was announced by former Minister Pravin Gordhan. And that's one. Secondly, there was a question of whether we're going to get somebody from outside to didn't evaluate what was happening at National Treasury. I think when it comes to that, the minister was against to say we are committed to do that, to expenditure ceiling. We spoke about the over 3 billion rand overspending, but before the end of the financial year, we definitely were committed to coming back within the expenditure ceiling. A commitment to the policy that the former minister or the government has always come up with, that we were very clear in our minds that we can't spend money that we don't have. So the question of living within our means is very important. So I'm saying that things that we committed to do even at the beginning, with the DG who comes from the National Treasury, we committed to do certain things and to say, let me say, we accept that there are challenges at the SOC, and we are saying we're not just folding our arms. Although some are not National Treasury's SOCs, but we've tried to come in and to say there is no talk, there's no compromise about proper governance, there's no compromise about a financial discipline in those organizations. So we are saying that we need to be just on what we said we'll do, and the things that we said we'll do at the beginning, and people were saying perhaps we're about to engage on a totally type of a budget. And here the minister comes, he has given South Africans, he has given the market, he has given the whole world the assurance that what we say we'll do. And we also don't want to claim easy victories. We also don't want to promise things that we can't deliver on. Where we're saying that there are challenges, I think we said let's come up front, and we can't be dancing around those issues, and we must say here are the issues, and we are very much aware of them. I think one very important thing that we are very clear about, that it's very important for government to create conducive conditions for private sector investment. We can't claim by any stretch of imagination that the turnaround of this economy will be done by government and government alone. So we've invested so much in trying to deal with the trust deficit between government and business, so that business can be able to come and invest their money into our economy.
And Deputy Minister, just to allow me to jump in there, because you did mention the budget of the former Finance Minister Pravin Gordhan there. I mean, in February, he had estimated the budget deficit at 3.1%. Malusi Gigaba, the Finance Minister, today coming out to say that it's much worse than that. It's now sitting at 4.3%, also alluding to the much worse government debt situation than was expected. Ratings agencies have flagged the deterioration in our debt profile as being a possible trigger for another downgrade. Many economists believe that this is coming. Are we ready for another downgrade? Can the Treasury navigate this? Can South Africans afford it?
I always say that we can't say we are ready for another downgrade. We understand exactly the consequences of that. That's why, as I'm saying, that we've been interacting with the rating agencies on a regular basis. Even now, as they're running out and we're having a teleconference with them. So the question of downgrade, we say we definitely we can't say we are ready for that. But one of the things when we interact with the rating agencies, it's been always the case of the SOCs, and we are saying, for instance, if you look at what has happened at the South African Airways, right? That's 6 months, by the way. What has happened to South African Airways? The board of South African Airways has been strengthened. That's number one. We are having the CEO, somebody who's coming from the private sector, who's now the CEO. But if you even look at the skills mix of that board, it's people who have dealt with business on different platforms. So what we're then saying, one thing that has been raised by the rating agency. Secondly, I think one thing that was very clear on that, all said and done, you can consolidate, you can live within the expenditure framework. But the main thing, the panacea of our problems, is to get back to the growth part of our economy. That's why we are investing so much time in dealing with the private sector. The Minister spoke about the CEO's initiatives and some of the programs, like the youth employment program that the CEO's initiative and the government are dealing with. So the point that I am making is the question of it's very important that we go back to the growth part of our economy. But let me also add to this one. This morning when I woke up and opened the window in Cape Town, it was raining. And that's very important that as far as agriculture is concerned, right, it's very important that it gets back and plays its role like it did, for instance, when we get out of recession. So all those things are things we are focusing on them so that we go back to the growth path.
Right, and I'm sure everybody would like to go back to that growth path, business and labour. Deputy Minister, just another thing. The panel of economists that I'm sitting with at the desk wanted to know rather the increase in VAT, value-added tax. Many economists have forecast that just a 1% increase there could inject some 20 billion rand in revenue that the government desperately needs. Is this the next step?
Remember that the minister didn't say anything about tax today on the MTBTF, right?
Right,
so
but maybe perhaps is this something that we should expect in the February budget? I know it wasn't mentioned this time around.
Yeah, I'm just saying perhaps there's a reason why he's not mentioning any tax, but we're looking at a bouquet of many things. Tax options being one of those options. And I may say that we haven't taken any of the taxes out, including the VAT, as one of the things that we should be looking at, right? So the tax, the introduction or the increase of any form of tax is a function of a number of consultations, including the Davis Commission, including the SAR, and many other role players. So we need to go through that process. We can't jump and then start coming up, making some pronouncements which have not gone through the processes that we usually go through. So all what I'm saying is that there's no holy cow as far as tax is concerned. No, any tax that you introduce gets quite contested. So it's very important that you do try and consult as much as possible.
Well, thank you so much for your time, Deputy Finance Minister. We'll have to leave it there. That was Deputy Finance Minister Sifiso Buthelezi. Azar, I mean, your views on some of the things that the Deputy Finance Minister had to say, particularly this need or emphasis to create, conditions for private sector investments and incentives for the private sector to invest in this country to grow. I mean, what kind of incentives and conditions would have to be created to enable that?
Well, to begin with, and this is my whole message from the start, it's going to take a long while for these guys at the head of Treasury to start to rebuild confidence in their ability to draw in the private sector. There's also been a lot of talk about significant changes in the personnel in Treasury itself, so that there's even that uncertainty at the moment as to whether the members of Treasury are indeed behind the initiatives that we wanted them, that we believed in fiscal consolidation, or have Gigaba and Buthelezi brought in their own people who are going to pander to their way of thinking, and that again initiates this skepticism about state capture continuing, etc. It's gonna take a long while for them to prove the skeptics wrong.
Right.
I'm not saying that's impossible. I think it is possible. But the proof of the pudding will be in the eating, and that eating will only take place in a year or two's time.
Right. We are now actually going to get a perspective on exactly what was driving the rand lower, and find out how the bond market has performed in the wake of the budget. We've got Jan Sluys-Kramer, foreign exchange and money market sales from RNB on the line. Jan, thanks so much for your time. Now, before going into this budget, the rand started off on a slightly firmer footing. After this budget, that situation has changed. Can you please tell us why?
Yeah, I mean, it did start this morning marginally stronger from where we were yesterday. But I think, the sentiment was always for the rand to get driven weaker. I mean, unless the finance minister was able to pull a rabbit out of the hat, which unfortunately he wasn't able to do. So I think, overall budget is just seen in a negative light. Stop losses got triggered, liquidity is thin, and the rand ran up to just below the 14 levels.
Right, and how has the bond market performed prior to the budget? The benchmark R186 was flat. What did it do after the budget? Did it follow the rand weaker, or did it take a different path?
No, very much so. So, I mean, for most part of the morning, the bond market was flat. We obviously saw after the budget, pressure coming on, following the rand weaker. Bonds obviously driven higher. So, the outlook for the short term is probably not that rosy at the moment, to be honest.
Right, and notwithstanding all the factors that are happening globally that we also take our cue from. But are you able to give us insights into exactly who is doing the selling? Is it the local investors? Is it foreign? Are you able to give us that information at this stage?
I think it's probably spread mainly across the board, to be perfectly honest. I mean, obviously foreign investors dumped the rand quite aggressively. Obviously with the risk of rating agencies hovering again. When we kind of got up into the higher 1390 levels, there were a couple of local buyers of rand, obviously those taking advantage of the weaker currency and cutting out some profit into the 1390 levels. So, I mean, it was kind of, initially the run-up was largely driven by panic selling of the rand, but when we got to the 1395 up to the 14 levels, some common sense kind of prevailed. And you did see some of the guys that had been long dollars probably from the lower 1350 levels from earlier on in the week, just cashing out and taking profit, which kind of put a lid on it for the moment.
Well, Jan, I'm sure you were paying very much close attention to what was being said at the budget. I must ask for your views of what the finance minister had to say regarding the midterm budget, our expenditure plans, and how you see this shaping the performance of the rand and our bond market going forward.
He basically didn't say a hell of a lot, to be perfectly honest. So what he kind of really did is he just kind of, came out and put his cards on the table and said, growth is going to be a lot weaker than anticipated. Budget deficit is obviously going to go a lot wider than everybody had thought. There was no real clarification on, how they're going to raise funding. There was a thing about, going back to the international capital markets, or when was the timeline for that going to happen. So it's kind of, he's deferred a lot of it. He's got all the bad news out into the open. There was no mention made about any nuclear spending, any health bill spending. I think his hands are very much tied in probably what he can and can't say. So, I guess now we've really got to wait and see for February next year when the budget is delivered, and let's see, what they are going to do. At the moment, everything is very much left up in the air with nothing really said to, make you kind of get excited about how they're going to try and balance the books.
Sure. Thank you, Jan Kramer. We're going to have to leave it there. He's a foreign exchange and money market sales at RNB. I must say, I personally would take a little bit of offense at being told that after speaking. Well, welcome back for further analysis on the midterm budget that was just delivered by Finance Minister Malusi Gigaba. We speak with Ibrahim, and he's the CEO of Oasis. Mr. Ibrahim, thanks so much for your time. As a businessman here in South Africa, did that midterm budget inspire confidence in you?
So there are a couple of issues, Fifi. You could inspire confidence, or you could hurt the economy in the short term. If you inspire confidence in the long term, which will be very good for the economy long term, but in the short term, if what the minister has done is defer taking some serious action on the deficits and debt, and is allowed debt to go out very materially, and the deficit to increase very materially. The net result is that from an international investor and a fund investor and a corporate, confidence would be a lot lower because, to give you an example, just a few years ago in 2009, our budget, our debt servicing cost was 8.8%. We're now expecting debt servicing costs to reach 14 to 15% of revenue. That means just to pay for the funding of our debt, it's really 15% compared to less than 10% a few years ago. So we believe that there's been a significant deterioration in the fiscal situation in the country. The budget deficits increased very materially. We are faced with a very, very weak domestic economy, and we believe that this doesn't go well for confidence. What it will do is we've had a period of approximately 2 years or 3 years since Nenegate effectively, where the corporate sector has not invested materially in the domestic economy. Most of the investments and acquisitions have happened internationally. And if we've seen this week that RMB's announced the acquisition of a small bank in the UK, Mediclinics announced the acquisition, increased the investment in the largest hospital group in the UK. So there's a massive internationalization of our corporates and very little money coming into the economy. And that's not great for economic growth long term. So in a nutshell, we've traded short-term benefit for long-term pain. So historically, we've taken short-term pain for long-term gain. We've reversed that at the moment. So I would say this reduces confidence very, very, very materially. And you can see it through the rand, you can see it through the stock markets, you can see it through the bond market. And this has been anticipated for a couple of days. And so there's been quite a big reaction today, but there's been a reaction over the last week. So the bond market is weakened by 33 basis points in the last week. Now that's very, very, very material. So bond prices would have dropped by 2% in 1 week. Now that is very, bonds are the most stable investment that you can have in an economy.
Right.
And what this means is that the most stable investments has deteriorated very materially.
Well, so we're going to have to leave it there. And unfortunately, thank you so much for your insights. Certainly catching up with your views at a later stage. Then it was Ibrahim, who is the CEO of Oasis. Now, gentlemen, if you just allow me to ask you for some closing comments as we wrap up this discussion. Osman, I'll begin with you. I mean, I put the question to the finance minister about VAT being a possible avenue there. He didn't say yes, but he didn't say no. Your final comments?
I think you asked earlier on about any positivity in the comments. I have to say, and I did think about that. And so some of the positive points for me, unfortunately still overshadowed by the negative points, is that he was very direct and open about, what some of the problems are. So, for example, the point that government corruption and the high rate of tax is having an impact on tax morality. So that the fact that they are openly, and he made that statement, recognizing that that is going to have an impact on revenue collection. The fact that we have a reduction in something like customs duty, showing that capital goods are not being imported. We're not growing. So I think. Very, let's say, openly and almost soberly admitting what the problems are. I think that is, for me, one of the positives. But the overwhelming negative remains, so what? What are we going to do about it? Where next? And have we, and my closing comment is probably around, if we're talking about reducing the budget deficit, the main way to increase taxes is not through extra PIT or even VAT. VAT is a good place to go, but the main way to increase taxes is by growing the economy and improving tax morality. And together with that, to reduce the deficit is to focus on expenditure.
Sure, thank you. And Xhanti, I mean, if you can just maybe dumb it down a little bit for us consumers, who don't work at these institutional houses and all of that. But for a consumer trying to understand what this budget means for them, your closing comment, what should consumers take from this?
Yeah. Well, I mean, first first of all, for me as a small business, I thought, looking for a positive, this idea that, we must be paid within 30 days, otherwise that's financial misconduct. I thought that was very strong language, and I think something that's quite welcome, because actually, in a real sense, that has not changed. Small business still go under. I know we still have a lot of these bills that don't come through from government. You do the work and you wait months and months, and and so if it's now looked at as financial misconduct, that actually is something that also, these procurement guys will actually be punished for. I think that's a very, very positive thing. But I think generally, in terms of the whole budget, the language that is coming through is positive, but for everybody else, we must really look for whether or not we get the gains from actually the practical measures. Sure. That's really the big thing for me.
Sure. Azar?
It's not what was included in the budget, but what one should see through, and that is that despite enormous headwinds, this economy is not collapsing. And we might turn out to be surprised, and revenue growth might actually turn out to be a little better than they budgeted for. But it is the biggest challenges on the expenditure side, and very little was said, probably understandably, about the elephant in the room, which is next year's public sector wage hikes.
Sure, which I understand are expected to be in the region of 10%, about double that of inflation. Yeah. Wow, we certainly, I think, can't afford that. But gentlemen, we're going to have to leave it there. Thank you so much for your insights. Thank you so much for your time. That was, of course, Dr Azar Jammine, Director and Chief Economist at Econometrix, at Xhanti Payi, Economist and Head of Research at Nascence Advisory and Research, as well as Osman Mollagee, who is a partner of International Tax and Transfer Pricing at PwC. That is where we leave our post-analysis for right now. But do stay watching CNBC Africa. Will continue with the coverage. In fact, speak about the youth. Other panels are lined up right after this.